Hello traders, my name is Gregor Horat and welcome to a new video update. Today we will take a look on the euro dollar, on Aussie dollar and the S&P 500. On the euro dollar weekly chart we are bearish since the market fell below this support line of this corrective channel, so of course we anticipate further weakness in impulsive structures. On a daily chart we can count 5 waves of decline from this high, which was this high, so I think that highs are in and that market will move lower in minimum 3 waves, okay, because even if the decline from 137.10 will be corrective, we still need 3 waves. So it's either wave 1 or wave A, corrective pullback, and then we should see more selling in third leg of decline, which means we will be looking for a push below 127.45 as long as the market is trading below 137.10. Ideal resistance zone for corrective retracements are around the previous 4 waves and around 50 to 61.8% retracement levels. Okay, we already tested this 50% retracement level. We were also slightly above this wave 4, so from Elliott Wave guidelines we can say that this is the level from where sell-off could occur. In fact, on the 4-hour chart I can count here as a 3-wave rally. Okay, this was wave A, 5 waves within this leg, 1, 2, 3, 4, 5. Then we had a sideways price action, which is called a corrective movement, so I label this as a wave B triangle, actually as a running triangle, because wave B moved above the start point of wave A. So this spike to a new high was probably wave C. As you know, yesterday I was anticipating a little bit higher levels on the euro, but of course I immediately turned bearish when I saw a sharp decline, clearly in impulsive fashion, through this trend line, which I believe is a trend line of a corrective channel. So as you know, my technique, when the corrective channel is broken, you will be looking in the direction of a larger trend. So because our primary trend on the daily chart is down, that's why I labeled this as a possible end of a wave C, and we are looking lower. Of course there are also other wave counts possible, but because of our, as I said, larger outlook, I'm definitely looking lower here because I don't want to miss this primary trend. In fact, this slow price action, if you compare this movement to this sharp decline, then we know that this is an impulse and that this is corrective movement, because corrections are always slow and choppy and small. Okay, so this is another confirmation that this is just a pause within this current downtrend. So in the near future I would love to see prices to break this wave 1 swing low and then extend towards 129 level. On the 4-hour chart we have also seen a divergence. Actually, I will show this right here. A divergence also between waves A and wave C high. Okay, you can see wave A, or even this wave B high, and then here was a wave C high. Prices were higher, MACD was lower. This is called a divergence, which is very typical between wave A and C wave, and very common between third waves and fifth waves. Okay, so I think that this was just another confirmation that market has stopped out here and that we are going lower. On this 4-hour chart we can also see that market was in uptrend here since prices went above this 50 period moving average. When this 50 period moving average was tested, the market bounced higher. Notice that yesterday market moved to the downside through this 50 period moving average, and now this same moving average is trying to react as a resistance. So again, I think this is another very nice price action for further weakness here. If we take a look on the daily chart, we can also see a very strong push higher, which was made on April 16th, and then a very sharp reversal next day. Okay, so this tells me that this bear market, that bears are much stronger than bulls, okay, because bulls were erased just the following day, and these are quite big candlesticks. Okay, so if we also consider that market closed at the lows yesterday, then of course you want to stay with the current sentiment. So I'm looking to the downside. If for example yesterday at the close the market would reverse and close here and not here, then of course I would be looking for more upside, but with this pattern I need to look to the downside. Now let's take a look on the Aussie dollar. On Aussie dollar, what is this? On Aussie dollar weekly chart, we mentioned in our last video when we were talking about the Aussie dollar that wave E is probably finished here and that we will see higher levels. Well, notice that market did not close above this falling trend line. Okay, so actually the prices reversed back into the middle of the range. In fact, on a daily chart we noted at that time that we are tracking a possible impulsive rally here. Okay, so we were expecting more gains, but we also said that we want to see a break through this upper trend line of this trading channel. Because of that time we were tracking possible wave 1, wave 2 and wave 3 underway. Okay, so we were looking for an impulsive structures. In impulsive patterns you want to see break through this base channel, okay, to confirm you that we are trading in wave 3, because in wave 3 the volume is typically the strongest. That's why you see push out of this trading channel. In fact, as you can see, prices reversed from this upper side of this trading channel, and the 2-3 days later we have seen a very strong decline, clearly in impulsive fashion, through this corrective channel, okay, through this support line connected from this March lows. So of course I need to respect the price action and not focus only on my bias, but I need to respect the market, what the price is actually doing. So when I saw this sharp decline, of course I relabeled the wave count, and I spotted here only a 3-wave rise and a daily close below this support line, followed by this sharp impulsive fall, which, as you know, is a very strong bearish signal. So of course we turned bearish now on Aussie dollar, and it seems that this wave E is still incomplete. So if we go back to this weekly chart here, I think that we will see more downside, and that wave E will be more complex, like WXY or double zigzag. First zigzag, maybe a wave X, and now we will be tracking a second zigzag. So we will be looking for a push below this swing low from March. In fact, notice that each leg, previous legs within these triangles were quite sharp and very clear. Okay, they were all in 3 waves, but usually one leg within the triangle is very complex. So I suspect that this wave E could be a complex leg, so I would really not be surprised to see a push towards parity here. So we have seen a break to the downside here, and on the 4-hour chart we are looking lower within this wave A. Okay, now let's take a look also on the S&P 500. On the S&P 500, that's actually SPY, which is the ETF of the S&P 500. I don't have so much historical data on S&P 500 cash market, so that's why I have here SPY, but actually patterns are the same. As you know, we were bullish here for some time. We were looking for higher levels in wave D. We expected a test of this upper trend line of reversal expanding triangle A, B, C, D, and we expect wave E. Reason why we decided for this labeling is because this recovery is looking quite overlapping and very corrective. So each leg in a triangle is corrective, so that's why I think that this is quite good labeling. But of course, my wave counts always need to be confirmed by the price action. So I will be looking for a strong sell-off only if I see a larger impulsive sell-off from current levels. For now, this market is reversing lower quite nicely, and as you know, we were tracking this 5-wave rally. We were anticipating a little bit higher levels at the start of this week, but again, when the market turned sharply to the downside, we turned bearish as well, because we need to respect the price, we need to respect the structure of the price, and this fall on the intraday chart has unfolded impulsively, so we immediately turned bearish. And as you can see, the market is already weakening here. We are now already below this trend line of an impulsive channel connected from wave actually from wave 2 lows and wave 4 lows. So if we will see a weekly close, tomorrow is Friday, a weekly close below this trend line, then I think that this market will be headed even lower in minimum larger 3-wave corrective retracements back towards this wave 4 swing low, because you know, when the 5 waves patterns are finished, then you will tend to see a 3-wave retracement, usually back in the wave 4 of a 1 lesser degree. So this is the area that I would expect to see a 3-wave fall. Now on this 1 hour chart, we are looking lower, and wave C target, even if this is maybe a sharp decline, wave C target is around 1530. So I think that market will push to this level as long as we are trading below 1574. The next wave count is also quite possible, maybe a leading diagonal in this wave A, wave 1 or wave A, if I rework the wave count here, and then we could see a pullback and then another sell-off. So in either case, I think that this market will move even deeper. But the reason why I'm looking straight down for a wave C here towards these targets is because on this futures market I'm tracking this head and shoulders pattern. This was our left shoulder, head, sharp fall, and now the right shoulder complete, and now we are testing this neckline. So if we today will close below 1538, ideally even below this swing low from early April, and then I think this could lead to very strong sell-off on the S&P futures. Okay, ideally then we will be looking for decline towards 161.8% extension measured of this wave B2. But when you're tracking head and shoulders pattern, and when you will recognize a breakout, then I usually project the coming levels with distance from measured from a head to start of this right shoulder, and then put this same distance from the top of this right shoulder. So we can see that I come in with levels around 161.8% extension, so this is quite significant. 1520. This is the first head and shoulders measurement, and the next one is that I measured from this breakout point. Okay, so if we'll see a breakout, a daily close below this neckline, then we can see even an extension towards 261.8% compared to this wave B or wave 2. Okay, so in either case I think this market is headed lower, but as I said, we need to see a daily close below this neckline, but even more importantly below this swing lows from early April. Okay, traders, this is it for now, and I will catch you on the intraday updates page. Have a good day.